Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Tuesday, January 27th, 2009. Well, as we get into today's video, folks, I want to talk a little bit about the market, what's going on out there, because we're seeing another relatively volatile day, but not quite as volatile as we've seen in the past. We are seeing sell-off in oil today. Nice little drop in oil, about $3 to $4 down on oil across the board. And we are seeing some volatility on the intraday basis off key trend lines that we've had in for a certain amount of days, as well as ones we're going to draw in now. Now, you're looking at the intraday SPY, which mirrors the S&P very closely. And what you can see here is that we have key trend lines on this in pink, and then also moving averages. Now, the moving averages, the 20 moving averages in yellow, the 50 in white here, and the 200 in green down here. Now, the key thing about this, folks, is this. I have some key trend lines already in here, and the reason why, because they stretch back so long that for me to draw them in front of you would take literally minutes, and we don't have that in this video as I give you a synopsis of the market and what's going on. But what I will do is go back and show you where they come into play. Notice the top one, guys. This top one, look at how key this is. This stretches back days, and look at it played into yesterday's high of the day and today's high of the day. So that's why it's so key to continue to have these trend lines in and understand how to draw them in for yourself. Now let's go back and find out how far that one stretches back, because it's quite far. Look at how far it stretches back. Literally days and days. To the high here on, what day was that? Let's check that out. On the 21st of January. That's the high close, or the high print right up here. That trend line connected to this point right here. So it's a down-sloping trend line. And you can see that down-sloping trend line comes in to be key. Now, also, a couple other things, guys. I want to go all the way back. All these trend lines play key roles. You can see the down-sloping one here. Up-sloping one starting right here plays a key level as well. But reason why I want to show you, look at this up-sloping one. Connects to the low here, which is connecting exactly to support right here, also mirroring the 50 moving average. Now, when you get these trend lines to connect, and it also mirrors with a trend line like the 20 moving average, the 50 or the 200, that's a double area of support, and you have to respect that. Okay, guys, I want to make that clear. So notice the double top, triple top, all the way up here, which extends all the way back and coinciding with the high here. The uptrending one here, which coincides with the low yesterday, and coming into key play right here in today's bounce play. And also the one that's slightly downsloping. Notice on the sell-off this morning how we pushed higher and then sold off all the way back down, bounced off that key level, bounced up, and then retraced for a double bottom intraday off that level as well. And again, those are key levels you have to monitor constantly, because when one of them holds, you're going to get a good bounce. When one of them breaks, you're going to get an exceptional drop in the market. Now, I'm going to draw in some ones intraday, but first what I want to do is just discuss really what's going on today. You've had more earnings news today, but nothing major. The Dow is up about 32 points, the S&P up about 6, and the NASDAQ up about 11 points. So you have a slightly positive day across the board. But again, you see that volatility. It's not as volatile as yesterday. Yesterday was a wild day, but you're seeing still volatility out there. Now, the key is this, guys. Geithner got confirmed last night, so we have a new Treasury Secretary. Also, tomorrow at 2:15 p.m., the Federal Reserve will release their FOMC policy statement. Now, rates are basically zero, so the question is, are they going to find some unique way to make us, or improve things by some unique way of manipulating this or doing this? And that's going to be really what the market's going to look for. Are they going to have these different ways of handling things now that they really can't lower interest rates any further? All right, so keep an eye on that, guys. Also, GDP, jobless claims coming out. Those are going to be both big numbers in the next couple days that are going to play key roles in this market. Initial claims on Thursday. Okay, now let's talk a little intraday analysis, guys, because what you did see here, and notice the key trend line across here that's coinciding with the highs, and these again stretch back multiple days, so I can't really show you how I draw them in, but I want to more focus now on other levels. Let's first take, just scanning through, this level right over here. See this little bit of a push up and then the pullback? Draw in from your low here straight across. There you go. Look at that. So you take the low on the pullback, which, by the way, yesterday I had this line in for you guys, especially in the Research Center video after the bell when I put out my real hardcore analysis going into the daily charts. Notice how this low mirrors the high here on the bounce, and then also plays a role into today's action. On the pullback, you pierced it before breaking up to the high, and then again, it's coming into play right in coordination with the 50 moving average and our lower trend line as well. So I continue to be it's very important to continue to draw these trend lines in, guys. I can't stress that enough. Now take the high area. Notice on this, where we had this bearish flag pattern before the breakdown yesterday, take the high area on the bounce, and that's what you also want to do. You want to take the lows and the highs and scan them across and look at where this plays into roll as well. Alright, notice the high bounce. What is that? The high print. So when you're trading this market on the push up this morning, you want to sell right into that because you know you have resistance. If you broke through that as you did over here, the next resistance point would be up here. So notice again how everything from yesterday and even further back is playing a key role in our analysis and understanding whether or not the market's going to go lower or higher. Okay? Also, what I want to show you here, guys, is you have a little head and shoulder intraday pattern. Notice this is your shoulder, and I'll just draw it in very carefully. I don't want to jumble the market up too much. Here's your head. Okay? And we'll draw that in a little clearer, as I went a little too far over. Here's your head, right up here. So you have your shoulder, head, and a little mini shoulder over here, and now you're starting to break lower, guys. So you know that this market could very well sell off. Here's your neckline, trend line. Once this gets broken, chances are you're going to dump out, and look at what you happened. You closed below it, that's a break. You confirmed it here, which went right into the trend line, and now all of a sudden, you're starting to sell off lower and break down. And just knowing these patterns, putting them together with our trend lines we draw in, and putting them together with the moving averages are going to give you the best possibility of being a profitable trader out there. You'll be in the upper 5% of all traders in the world if you can master this kind of stuff. I have no doubt in my mind. No doubt. Now, the other thing I want to point out, folks, is this lower trend line. If this gets broken now, and again, it hasn't closed below, so we have to give it the benefit of the doubt, but this lower trend line trends all the way back multiple days to the 23rd. So this is a big, big trend line that we're currently trading on, and we'll have to notice later in the day whether or not they can save it and get us back above, or whether or not they break down. If this breaks down, in my opinion, you could go down to the lows of the day down here, which again will be very good support. Right in here now is a support line that would be in play should this low get closed below and should we go lower, okay? So watch that very closely, guys, okay? A couple other things I want to point out as we go to the end of this video. Number one, as I mentioned, all these hardcore analysis stuff I do in the Research Center at night where we cover the daily charts, and I'm going to flip to the 60-minute next. But keep in mind, you definitely want to probably take a shot at that as we go over calls, we do market guidance without Wall Street hype, we do educational videos, we do picks, we have a trader watch list, which is our compilation of all our pro top traders, put out a watch list, and they update it daily, and obviously that's available to you in the Research Center at inthemoneystocks.com, okay? Now let's go back to the 60-minute. Here's your 60-minute SPY, guys. Look at this little bit of an in spirit of M pattern possibly here. Alright, so that's a little on the bearish side. The positive thing on this 60-minute intraday is that you are still trending above the key moving averages here, the 50 and the 20 moving average, and you want to see if you can hold on to those moving averages. Secondly, you want to remember the same trend line I just drew in on there can be drawn in here as well. Alright, this is a very important trend line we're currently on, and this is the same trend line that I stretched back on the intraday, this one down here. Same one, and notice we're trying to get back above it. You can see the war being waged here. This is literally like a massive war as they're trying to hold, or the market's trying to hold above this key line. It knows, the market knows, and the traders know, if this breaks, we're going most likely much lower here intraday, down possibly the lower trend line here on the intraday. Okay, so keep a close eye on that. Remember what happened? We had these key trend lines and also the head and shoulder intraday pattern, which broke lower, which insinuated a fall down to this level. Now, if we break further, that's another story. Okay, so keep a close eye on that, folks. Going back to the 60-minute. So you have your double top here. Alright, that's something you want to watch, but also note how I had drawn in the upper level and draw that all the way back. Look at this. Key level, and we had talked about this yesterday, multiple videos ago on the intraday analysis. I had brought this forth, that this would be a level we went to and meet resistance, and as I've said multiple times, you get through that, you're going right to here most likely. So that's why this is such a key level on the 60-minute, and on the intraday it's right up here. Same level, right up here. That's why it's so imperative whether or not we break it, because it's going to result in a very sizable move to this 200 moving average. Again, if we break this level, then the next area of support is going to be right in this area on the 60-minute, which is going to be very good support. Alright guys, come join the Research Center. We look forward to having you. It'll open your eyes to this world of trading, folks. Take care.